Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Okay, welcome everyone to the Week in Italian Startup, where Nicola and I we go through the big news happening in the latest weeks. So let's get going, Nick.
Ciao, Jack. Good afternoon. Good morning. How are you going? Great.
Yeah, let's get started. I mean, Casavo, a proptech startup, raising about 100 million euro in equity in Series D, led by Exor, and a bunch of additional investors and an additional 300 million in debt. So I think that's the biggest round of last week. Very interesting deal, I would say, and I think it's kind of worth to maybe go through the list of investors, because it gives you a very good overview of what is happening in Europe for later stage rounds, and maybe to give the audience like some names of people that are actually, and companies, investment companies that are working into the space. So first of all, what is interesting, I would say that Casavo is the first investment of Exor Seed, our people that we really admire, and we've been seeing them like moving very fast. So back in 2021, Casavo was basically the target of one of the first investment. I would say the first investment of Exor Seed. And then from there on, basically everything went probably extremely well, and this latest round is the proof of it. So what's your feel?
Well, I mean, I'm not surprised. So Exor is a weird beast in terms of seed investor. So they range from very small checks at the very beginning of startups to the ability to deploy capital at this size and stage.
Yeah.
So I mean, this proves that they are willing and able to cover end-to-end the spectrum of investment that they in startups in the portfolio. So yeah, that's a good signal also for the other startups of the portfolio. And then I was reading from the article that Casavo said it represents Europe's largest proptech financing to date.
Wow,
that's something, quite something. Right?
That's absolutely.
I'm actually surprised that if that's actually true. I'm not doubting it. I'm surprised that proptech is, I believe a segment that actually is capital hungry.
Yeah.
So interesting piece of news.
Yeah, no, totally. Going through the list of investors, I thought it was particularly remarkable to mention everything that is happening. So starting from actually the new investor. Well, let's start maybe from the existing investor. So thinking about the current investor, I think what was interesting is to maybe take a look at the list. So starting from Greenox, which has been like extremely active in Europe in general. It's a huge fund. Essentially, I believe it's based in the US. This one in particular. And as we analyze the portfolio, we can see he's pretty much into some of the biggest deals on the planet, I would say, starting from Airtable, Canva, Stripe, Deliveroo, very, very diverse portfolio. So yeah, definitely like a heavy hitter, I would say. What is your thought about?
I totally agree. Yeah. Totally agree. I was reading they're based out of San Francisco. Unsurprising, I believe this is them. So let me check. They're from 2012, it seems. So they have 10 years old.
Wow.
So quite recent.
Yeah. And checking the portfolio is impressive. Super impressive. For sure. Yeah. So not much information, actually. Not much information, but definitely like a very well calibrated fund, I would say. Very
yeah, more than 100 investments out of the 3 funds they raised, according to Crunchbase.
Yeah.
Right now, and they've been picking up pace in the last 12 months, I would say, from the chart. It's like ramping up the number of investments.
Yeah, moving on, some other great realities in terms of investment companies, starting from Project A, Berlin-based Project A. Very interesting payoff. They call themselves the operational VC, which I thought it was particularly cool, because it kind of underlines the fact that they're like incredibly hands-on activist, maybe activist too much, but very active investors. So that's something very cool. And I totally like their approach. Very hands-on, very direct, good raise in general. So it's an interesting play for sure.
Yep.
Yeah. Another interesting one is Pico's Capital for sure. That's another great company that they've been investing in seed and Series A with a hint for very good deals and very specific deals. I would say also operationally. So I think that's also what differentiates them. Both Series Seed and Series A. So you can definitely see like the variety. I would think that 60 plus investments, 700 plus million raised, and a bunch of companies maybe involved. So that's extremely cool, I would say. So 2 big players from Germany, and the third one from Spain, Bonsai Partners. Basically, that's a Madrid-based investment company. And again, very interesting portfolio, I would say. Idealista, Glovo, just to mention a few. So yeah, that's extremely interesting. So these are bigger players that are playing in the later stage phases of the evolution of companies, and probably we'll see more and more activity also from them, I would say.
Yep. I was taking a look at the funding history of Casavo. Just FYI, Pico's Capital was the pre-seed investor in Casavo in 2017. So they've been around since the beginning.
Okay. Interesting.
Indeed.
Yeah.
Cool.
Moving on, I would say, I mean, this is an interesting deal structure. So 100 million in equity and 300 million in debt. So again, we have the sort of the big debt component, which, as we mentioned before, because of the nature of the business, it perfectly makes sense in many, many ways. So that's extremely interesting, I would say.
It is probably a good time to remind that Casavo started out by being a platform for buying smart, specific type of properties and flipping them quickly on the market. So it was a buy and sell startup basically, or buy to sell startup basically. And they've been pivoting to a different model where, if I am right, if I understood it right, they're basically supporting, pivoting to a marketplace type model where people can sell the house on the platform, and Casavo can be basically the financing partner for who is selling to buy. So they're bridging the debt to sell to buy another house. So that debt is probably related to this new marketplace approach, and not just for the buy to sell operations.
Interesting, super interesting.
Yep.
So very interesting deal for sure. The biggest round of last week. So moving a little bit down, but still like one of the huge big rounds, Series B, $75 million, medical micro instrument. So this is a microsurgery robotic startup, and they've been essentially developing a very interesting and powerful tool for a microsurgery in general. And what is particularly interesting is that there is a big collaboration, I think, with the University of Pisa, which have been like extremely fruitful. The raise is basically built in function of the US expansion of the company. So essentially, that's their main objective. Second element, which I found particularly interesting, was the fact that the investor lead is Deerfield, which is a healthcare-focused investment company. And that's also a very, very huge New York-based company with a lot of employees and really technical portfolio companies, very active in very technical and specific fields of healthcare. Very, very cool. Yeah, therapeutics, medical technology, healthcare, a little bit of cross industry, but mostly I would say an extremely technical investment thesis. Yeah.
And I don't have much to add here, other than one of the original investors in the company is Kairos Partners.
Yes, good point.
Yeah, so we do have some Italian investors that the company previous stages. So,
and Panacas is really the sort of the one of the benchmark fund in Italy for healthcare, I would say. So
yeah, it actually appears twice here with medical micro instruments and with BetaGlue Technologies. They were investors there as well.
Perfect. So good week for them.
Yeah.
Awesome. So moving on to Unobravo, therapist platform raising 17 million euros in Series A, led by Insure Partners. So let's take a look at Unobravo. So we mentioned in a few episodes back, and we did a few comments about how exactly certain medical practices are quickly shifting at their faces, and psychology and therapy in general is definitely one of those. And this is another proof, sort of corroborating the point that we were making. So Unobravo basically is an online psychologist, very interesting founder. I was kind of checking before Unobravo, she was kind of pushing psychology therapies by Skype. So that was the beginning. And everything, and the story is great because then everything is evolved essentially into a full platform play. So I thought it was particularly cool.
Consider the platform was basically almost bootstrapped to the current numbers. And from the article, the current numbers are pretty crazy.
Yeah.
2,000 therapies, and that's okay. 40,000 patients and 500,000 therapy sessions.
Wow.
And if you run the math, that's quite interesting. I mean, on average, a therapy session is around 50 euros per session. If you remove the first sessions for each of these patients, which is for free, you probably have, I don't know, 450,000 sessions, roughly speaking, times 50. That's quite a bit of a market for bootstrapped companies. Probably 23, 24 million euros of ecosystem value generated
of GMV.
Yeah, something like that. GMV.
Something like that. Yeah, exactly.
GMV for 2,000 therapists.
Yeah.
So it's like 10,000 euros each.
Super interesting.
Not too shabby.
No, not at all. And definitely riding a great wave. Actually, that's a sign of this great wave that is shifting medicine and practice for sure.
The other interesting thing I was noticing is that we got, I believe, two startups in Italy doing a very similar project. This one, Unobravo, and what's it? It's Serenity, and they are both led by female founders. It's an interesting piece of news. Yes,
that's cool. That's super interesting. Another element which I thought was great is that this Series B essentially is a follow-on from the first round, Series A, again led, I believe, actually, let me, I was checking. I was checking the kind of the story, the equity story. So bootstrapped, and then the Insure Partner is the first, is the big lead on this Series A. What is interesting is also the co-investors in this round, which are also like a good amount of founders. So, and operators of the sector, from Sion, founder of Vinted, to people from BlaBlaCar. So that's always like a good sign, I would say.
Good play.
I love that. Awesome. Let's talk about Insure Tech. So digital risk insurer startup Wallife, raising 12 million in a round led by United Venture. So this is I thought it was a very good and interesting play on insurance in general. So now insurance is kind of bleeding into anything digital. and these companies basically trying to address the problem by preventing and supporting a customer in case of hacking attack or other form of let's say manipulation or attack to digital assets. So I thought it was particularly interesting.
Mm-hmm.
And yeah, I think we mentioned a few of these elements in terms of biometrics and genetics, which is a very specific angle that they're taking actually in terms of how to play safe and how to put your information in a safety zone. Yeah, what's your take on this one?
I don't know. I mean, this is an interesting angle because for traditional insurance companies, those are risks that are difficult to model right now because there is little history, and they probably still don't have very effective models to price those risks. So I'm not 100% surprised that there's enough side there trying to address these specific products. Question is if there is natural demand for that. I mean, so this is if consumers, or there are some players that are actually really interested into protecting against account hacking, or these genetics products that we're talking about. This I don't know. But I totally see why an outsider could be the one to find out how to price these risks.
Super interesting. All right, going back to life sciences, BetaGlue Technology raising about 10 million, another big round comparatively in Italy, participated by LIFTT, Kairos, NEVA, and other investors. So that's also a very interesting one, I would say. Again, very technical. So here we're talking about rounds that are investing in some specific anti-cancer technology and different approaches. So that's very unique for sure.
Yeah, I believe it is some kind of radiotherapy system. Which I really don't know much, but this is the second instance of our friends at Panakes being present into our podcast.
Yes.
So good for them to be an early investor. Interesting round again. For hopefully an actual technology. Yeah,
totally. All right. NEVA in particular has been particularly active. So it was not just BetaGlue Technologies, but we're also joining a Series B round, which is a non-Italian round. It's an Israeli, but two Israeli startups in cybersecurity. So again, NEVA is kind of the venture arm of Intesa Sanpaolo for the listener. And they've been playing a little bit with some form of corporate VC fund in some form or another. So trying to bridge banking with new forms of technology. And they've been extremely active in the past 5 years for sure. So that's definitely interesting to mention. Not only exclusively Italian, but as we see exactly, they're like very much looking into a broad category of geography, I would say.
They've invested quite a bit in Israel. They joined at least another round recently, Classic Q, quantum computing, because I also believe that they are piggybacking collaborations between Intesa, the banking group, and the innovation center that might be involved with Israel. But actually looking outwards quite heavily as a fund. So that's a bit unusual for Italian funds.
Yeah. Interesting strategy. It's pretty unique strategy, I would say. That's a very interesting way to form this kind of strategy. All right, Nick, let's probably talk about your favorite of the week, which is which is Yolo. I mean, I'm not gonna ask question. You lead the way in this case. So Yolo, again, we're talking about Insure Tech in particular. This is it's a company that wants to make insurance extremely accessible and flexible. So that's very interesting. And among the core investor is Primo Ventures, and basically they just announced that they're gonna go public by August, so in 30 days, and that's the idea. Super interesting.
Well, they're currently in the book building phase. So in a few days we will know how is it going. The goal is to raise at least 10 million euros. So this is not a huge IPO, but it is a good way to get access to useful capital to grow in particular. As you said, Yolo is it was born as a micro insurance player. Evolved into more of a platform, even though they retain their micro consumer side, but evolved it into a full-fledged B2B platform to distribute also micro insurance or specific digital insurance products. So it's about making it extremely easy for a customer to subscribe an insurance product in many different verticals.
Cool.
They raise money from all the key players in the market, and now this IPO is a good way to further finance the growth of the company. So we'll see how it goes. It's not a huge operation, but
I'm wondering, what is just to discuss, what is the decision making of a company deciding whether to go public in the early phase, so maybe trying to raise 10-15 million, instead of actually, as you can imagine, raising it from regular VCs? So how does the decision making works? Is it a matter of vertical? Is it a matter of growth? Is it, I don't know, the founder willing to kind of get out as quickly as possible?
That's unlikely because the
of course
investors tend to get their lockup period.
Exactly.
It's a couple of years of lockup period, so you can't really dump shares on the market. So that's a no. That actually doesn't work. Well, remember that going public is a way to raise capital, first and foremost. And then a way for investors to actually liquidate their participation, but it takes time. So that's usually an interesting outcome. But the basic idea is you go public, you raise money, and you finance further growth or consolidation of the company. And you weigh it against alternative way of financing. And then you decide which one is the best for the current stage of the company, the current offering you have, and then you go for it. In case of Yolo, market sentiment was good enough to launch, to plan for an IPO, and then to go for it. So we'll see how it goes. But the signals were good. It looked like a good way to finance the further stage of growth, and that's the road that the founders and the company decided to proceed. In general, there are many ways. I mean, a fund in general could pull a trigger, so require the company to explore an IPO, or as in case of Yolo, the whole company all together. That's a good way to proceed.
Makes sense. Yeah.
But very often, our investors have the ability to pull the trigger to require a company to at least explore the possibility to IPO.
Got it. Super interesting. All right, let's finish off the way we like by talking about CDP and the infinite list of accelerator that they're activating. This one is particularly cool, I thought, because it's about welfare in general, and it's basically built with the support of Social Fair and also another player that we've been talking about, which is Impact, which is also another big player in impact investing in Italy, and they really focus on specific aspect of welfare, from individual to working to company welfare, economic welfare, and so on. So I thought it was particularly interesting. Yeah.
Well, how many accelerator now? 15?
I think this is number 15 or 16.
15 or 16.
We're around there, I would say. Yeah.
Yeah.
So, yeah. 4 months of deep acceleration, 100K, and then follow one round possibly. I kind of want to start kind of exploring people getting out of this accelerator. I think it's about time. I mean, we've seen the really first one, so yeah, I'm curious to see what's going to happen maybe in the next 6 months to a year, probably. That's what we're going to talk about.
We're talking about it with the boys in the half-year review. Again, 15 accelerators, probably going up to 20, I don't know.
Yeah.
Let's say 20 accelerators by next year with 10 startups per batch.
Yeah.
That's like 200 startups a year at least entering the market and looking for capital.
Yeah.
At $500,000 each, that's like, I don't know, that's
a lot.
Much. 50, 100 million years looked by the average startup coming out from this accelerator. So that's like,
Yeah. No, totally. It's going to be a push. For sure, it's going to be a push. We'll see how quality is going to feel like after that, but it's good. It's definitely on the positive note. We try to keep it positive. I think that's a good way.